President-elect Donald Trump has announced plans to impose significant tariffs on three of the United States' largest trading partners, China, Mexico, and Canada, once he takes office on January 20, 2025. He has pledged an additional 10% tariff on Chinese imports and a 25% tariff on goods from Mexico and Canada. Trump justifies these measures as a means to combat illegal immigration, drug smuggling, and address the opioid crisis caused by fentanyl, which he links to supply chains originating in these countries. However, these tariffs could trigger trade wars and pose risks to global supply chains and economic stability. The proposed tariffs come as part of Trump's broader America First agenda. During his campaign, he hinted at even steeper tariffs, including a 60% levy on Chinese imports. Trump accuses Beijing of failing to curb fentanyl exports and alleges inadequate actions from Mexico and Canada in tackling illegal immigration and drug trafficking. His proposed tariffs would mark a deviation from the US-Mexico-Canada Agreement, USMCA, which Trump himself renegotiated and signed in 2020, maintaining largely duty-free trade within the region. Despite recent dialogues between the US and these nations, including counter-narcotics cooperation with China, Trump insists on more aggressive measures. The announcement has sparked varied reactions globally. Chinese officials have criticized Trump's claims, emphasizing their anti-drug efforts and warning that no one wins in trade wars. Mexico and Canada also expressed concern, citing the potential economic harm these tariffs could inflict on cross-border trade. Economists have pointed out that most of the burden of such tariffs would fall on American consumers due to higher prices, contrary to Trump's assertions. Financial markets reacted with a surge in the US dollar against the Canadian dollar and Mexican peso, while stock markets in Asia and Europe showed signs of volatility. The tariffs could disrupt trade with key partners, raising production costs, fueling inflation, and reshaping supply chains. Retaliatory measures may escalate tensions, leaving the long-term effects on global trade and the recovering economy uncertain. How this strategy unfolds will depend on the willingness of all parties to engage in constructive dialogue.